Let's bring in Rich Ross, head of technical analysis at Evercore ISI. Rich, great to have you on. Walk me through this call.
Thank you. Yeah, so look, I work on the macro team here at Evercore ISI. What we do best is connecting the top down with the bottom up. And I think what we're seeing is that the breakout in technology is being driven by a reversal in those same macro forces which drove the bear market last year. And we continue to believe that peaks in the dollar, interest rates, crude oil, credit spreads, inflation, and the pace of policy itself will continue to drive the ongoing breakout in technology, both absolutely and relatively. And just to wrap that up, what we've seen in the first quarter is just a preview of what we're going to see in the subsequent 3 quarters this year, Morgan.
We keep hearing about the fact that earnings estimates need to come down. Does it matter when you're looking at the technical analysis, or is that factored into it?
Well, look, I'm a big believer that technical things happen for fundamental reasons, and the people that make the charts that I analyze are driven by the fundamentals and the macro. So I don't want to say it doesn't matter, but insofar as my work, I view the market through the lens of prices. I don't speak Fed, I speak prices, and what I see speaks volumes about what's going on out there, not just today, but what's going to continue to happen, Morgan, across asset classes, both top down and bottom up, as we see in the stock market each day.
Yeah, so the QQQs, I guess talk to me about the SPX as well, because it looks like here you have a first half target of 43.25.
Yeah, so look, the tail wags the dog. As you know, with technology, all roads lead back to tech and growth. And when you see this dramatic breakout from a 12-month base of support in the triple Qs after a 37% decline, it's consistent with further upside in technology. And given its heft, its weight in the S&P 500, I believe technology, 29% of the S&P. You add on comm services, another 9%. We're talking about 38, almost 40% of the S&P is being driven by technology and communication services, and what a coincidence, those are the 2 best performing sectors on a year-to-date basis. So almost by math alone, if you are bullish on technology and growth as a style, you are bullish on the S&P, and that's how I get to that 43.25 first half target.
Yeah, we talked about NVIDIA and just the fact that it's leading the S&P, it's leading the NDX higher to start the year, 90% gain, up almost 130% over the past 6 months. It speaks to the strength and the resilience we've been seeing in semiconductors specifically. What are you seeing in those charts?
Yeah, I mean, that's a great point. Obviously, NVIDIA is sort of the lead horse at this point, but semiconductors as a sector, really quite compelling. And when you think about semiconductors, Morgan, from a 30,000-foot view, this is the underlying commodity of technology. Compare and contrast with the underlying commodity of inflation, of value, which is crude oil, which is down 50% off the highs. And you can see that the bullish breakout in the stocks above 3150, which projects upside to 4100 to a new all-time high, is not just bullish for technology. It's not just endorsement of the technology sector, but really of markets and quite frankly, the global economy more broadly, given the increasingly technology-driven nature of that economy.
Rich Ross, great to get your insights. Thanks for joining me today.
Thank you. Thank you for having me.